Good morning, everybody, and welcome to the Sweep Show. My name is Nick, and with this presentation today, we're gonna talk about one of my favorite setups in the ES S&P Mini 500 future. And like the title say, identifying real-time high probability breakout plays with bookmap and order flow reading. Okay, so before we move on, I have to go through the disclaimer real quick. We are not a financial advisor or a broker dealer. Neither ScottPuccini.com nor any of his officer, employees, representative, agents, and so on and so on. This is for educational purposes only. Nothing that explained here is for recommendation or any solicitation of investment advice. So keep that in mind before we move on. So what exactly is a breakout? So for definition, a breakout refers when the price moves above a resistance area or below a support area. And the level of support resistance can be seen by a strong level of liquidity where lots of resting order provide big supply demand and needs more effort to be taken by aggressive orders. So a strong level of liquidity can stop the price from continuing on its path for at least for a while until the aggressive traders can recharge and take all the liquidity. And this doesn't matter if it happens to the upside or to the downside, against resistances or against support, and the behavior is the same. Okay, so for example, we're also gonna go through live example, not just only through slides, but we're gonna get there, and I'm gonna explain exactly how to see what I'm talking about. But as you see, like in this picture, you can see the liquidity level, the strong liquidity levels where they are over here in this red lines. Okay, like a 30-15 and around the 30-20 areas for ES, and here below at 308.25. So those are the stronger resting orders that have been there, long-term liquidity levels that are over here that have been sitting there for quite a long time. So we can expect that if the price gets there and those orders are staying there, they will provide a short-term pause, and aggressive traders will need to you will need much more effort to break above this level and continue higher. Okay, and we're gonna see exactly what happens once we get there. Okay, so before we go on, also I want to talk about how to set up the platform. How I have it set up so that everybody can see exactly what I see. As far as the heat map settings and the volume dots that we're going to use to identify the volume and what happens, and the DOM and the columns of the DOM. I have the current order book that I limit to the first 5 levels above and below. So in this here we got the pulling and stacking column, got the bid with the depth of market, the volume profile, for the offer, for the bids and for the offer, asks with market depth for the ask, then volume profile that I use just for the chart, and the session range volume profile. I like to have both of them so that I see the entire session range volume profile. But if I want to zoom in into a smaller time frame, a smaller time window, then I can see the specific volume profile for that time period that I look at. And also here are the settings that I use for the DOM elements. Okay, the one that we're going to look at is mostly this, the quotes delta, show the bid and the ask, and I set the maximum depth to 10 levels above and below, and split display. This is the most important thing that we're going to look at. We're going to look also at the volume and the ordered book, but this is the quotes delta is going to be one of the key elements to analyze the volume, okay, to analyze the market participants. And here you go to the pulling and stacking column. So what happens is when a trader pulls an order from the book, it means that he shows no intention to trade. And on the other side, when a trader adds an order to the book, he shows intention to trade, to get involved. Okay, so when you see traders stacking more orders on the book, that shows clear sign of willing to enter in the market and can be identified in particular around strong levels. And when you see the traders pulling their order from strong liquidity levels, that indicates weak intention of being in the trade. Okay, and so let's move on to the next slide, which is the aggressor volume. So the aggressor volume is the volume that you can see on the volume dots. So I have it set up as delta dots on my platform, and so delta dots, as you all should know, is the difference between the buying volume and selling volume. So it shows me which side is more aggressive on one or the other, and as you can see here in this little downtrend, how much actually is a very visual thing, that you can see all these aggressive seller, they keep selling. There's a little bit of buying here, but the more aggressive are selling. Some buying coming in, but see, even those small seller, they are accumulating here. So a little bit of buying, then more selling and more selling. There's no buying over here, and they keep selling and selling and selling, and more aggressive selling again. So this is something to actually look at very closely, together with the pulling and stacking column and the volume profile over here, that you can see also in this little range, that if you look at on the volume profile, you can exactly see how much more aggressive those sellers are compared to the buyers. There's a little not so much buyers that are like way outplayed by the sellers over here. So when you get close to a strong liquidity level, now this is not very strong, but there's sure some resting orders over here, and that's something that you want to keep in mind, and you want to look at, you know, what happens over here. Are there buyers coming in, or are there sellers keep pushing and pushing below this? Okay, we're gonna look some examples also moving, but it's important to understand the concept to see what I'm talking about and what I'm seeing. And even at the microstructural level, when you really zoom in, you can see every little transaction. You see there are, like in this picture, only a few buyers over here and way more sellers, and again a few little bit of buyers, but again more sellers, and some exhaustion over here. There's no interest of being trade over at this level, and they keep selling over here towards this support. So this is again same, even if you zoom in at the very microstructural level, you can see this activity, and it's important to look at once we approach a strong liquidity level. Okay, so how are we going to recognize if a level is going to break or not? And then here it comes my favorite setup. One of my favorite setup actually is the sweep show. It's what I like to call it, the sweep show. I don't know how I came up with that name, but I like it. So basically the setup works by identifying if a level is getting swept by looking at pulling and stacking column in conjunction with aggressor's volume. The heat map also help, but I like the pulling and stacking column a little more because it's a more precise tool to understand exactly what the market participants are doing, and it gives me like a number reference that that I use very much. And from this example, what you can see, this here, I can see that there's a little bit of a downtrend. There's a level over here of support, but this level there, it was quite strong, not super strong, but it was quite strong. Is getting there's some bids are getting pulled. You can see that from the colors, getting from yellow is getting to white. And what I like to see is right here. Look at this number, 525, meaning that there are 525 orders to sell more than there were previously, and so they are adding to the ask, and more precisely right here at the first at the best ask. Okay, and they are pulling instead from the bid. So I like to see these numbers being generally above 350 is better. There's gonna be a little bit of an art to it. That's something that you're gonna have to practice, and until you can see it coming to play over and over again. But on a general note, I like to see numbers on ES above 350. So usually when you see big order stacking and big difference from the stacking and pulling, that's also a good sign, but you want to see a big difference. So higher than 350 on the stacking side is usually better. So you need to use this in conjunction with the entire context. So you see the support that is getting weaker by changing the color. You see that there is no interest on trading up over here. There's more volume right here on the getting traded on the bid, showing intention of going down. So I can expect this level to be taken, and some aggressive seller come in and sell it all below to at least 74.50. Okay, and yeah, and as you can see, right a little bit later, getting taken, the level is getting taken, and it keeps trading down. There's some buyers coming in over here, and again it keeps trading down. And again, you can see again a big difference here on the stacking column from the sellers keep stacking, and the bids are they are in this screenshot, they are adding, but that's the big difference. What's the most important. Okay, so another thing to say is that, and we're going to see that with video examples, is that it's every day a very fast and constant battle between the two parts. You know, they will always be pulling and stacking very quickly and going from one side to another. You see this side one moment going to 200, 300, and next thing you know is minus 100, minus 200, and then next thing you know it's again up to 200, 300. So it's very, very quickly. You know, it's driven by algorithm, by the way. So you know, it's something that you're gonna have to be very quick and kind of get a little bit of a sense to it by looking it over and over. But when you see the price moving on a certain direction, and one side mostly prevailing over the other side, then you'll really see this type of play coming to fruition much more often than not. Okay, and yeah, and to the upside, again the same story. We got strong levels coming here to the upside. Look at the volume on the ask, People are buying and buying and buying and buying. There's a little bit of selling, but generally speaking, way more buying. And you can see even on the volume profile over here. But look at this, 550 here, stacking on the bid, and minus 201 polling on the offer. I like I like to see those. I like to get the sum of the 10 levels. I don't know exactly how I came up. I think it was by trying different setups, and watching it play over and over and over. I saw very much these similarities and these numbers come into play all the time, and that's when I started using it. But there's not a specific reason why I use 10 level. I kind of like to get a sense of the first 10 levels are above and below, but you could probably find the same structure even if you would go down to 5 levels. But that's how I came up with the numbers, and so I always use those 10 levels. I know that the numbers that you have for reference are usually above 350 for ES, and actually I use this only on ES because NQ would be way too fast for analyzing something like this. It's just like it's just way too fast. Okay, so coming back to us here to the upside, we can see the same type of action with the same setup, and the break again right here. You want to see this type of things. There's liquidity over here, volume dots, adding, and now here is still a little bit higher than on the ask, but it has gone down a little bit, but it was at 500 before, and that's when you start to realize, when you get this type of setups, the liquidity is gonna get taken. It's a high probability play. It doesn't happen every single time, but most of the time it does happen. Especially you can see here, this is the VWAP and the POC for the day. And generally speaking, if you have a downtrend or a down day and the price come back up and it's getting close to the VWAP, and you got like some liquidity levels right next to the VWAP, it's very, very highly likely that the liquidity are gonna get taken and get up to the VWAP. Okay, so how can I take advantage of this setup? So this is mostly a scalping setup, so it's a very quick identify, get in, take your points, get out. Okay, most of the time, but in some cases it can be it can give you way more points if you are in trend days. But anyway, when you identify those sweep plays coming up, like I say here, the volume and stacking levels, stacking and pulling levels are above 350 or 400. The sweep can generally give the opportunity to take 3 to 4 ticks profit, 4, 5, it really depends, but 3 ticks in general you can take them. And if you are in a trend day, you can look for way higher, like go up to like 4 or 5 points, or even more, but but this is typically more like a scalping setup. And once you identify that come into play, you want to keep your risk around 2, 3, 4 ticks at the most. 3 ticks as an average. If you have a good timing, once you start getting good at it, you can keep it lower at 2 ticks. But 3 ticks as an average is a good risk. The probability for this to come into fruition is really high. So even if you have a 1-to-1 risk reward ratio, usually the probability for it to happen is way higher, because especially in trend days, as we'll see here in a second. So the best environments, like I was saying, the trend days are the best opportunities, because you will see multiple levels of liquidity getting taken and break very easily. Especially the ES is very strong. We very often have uptrending days. We don't have so many downtrending days. When they do happen, they can be very, very lucrative. But the behavior is pretty much the same, upside or downside. The behavior is the same. In fact, in uptrends, you will see a lot of traders trying to pile up on shorts and just keep getting squeezed over and over again. Is you will see in those uptrending days level over levels, and bam, they get swept over and over again. And in downtrends, you will see many traders trying to just buy the dip, you know, big levels on the bid, and there will be taken. You will see the ES going down and plunging, you know, and getting taken those liquidity. So those can be really rewarding, and those days when you get them, you can definitely look for more than 3 to 4 ticks, but you can look for getting to the next liquidity levels up or below. Or oftentimes also in reversal pattern, especially on V patterns. They are usually the most powerful. Those happens mostly in trend days. So when you have a trend down or a trend up, very likely on a trend down, and the ES like to reverse, because we know until we are still in a long-term uptrend. So every time that, or most of the times when we have a decent downtrend, you will likely see a V-shape type of reversal pattern. And all the traders that missed the trend in the first place, they will try to get in and be like, oh yeah, I want to get back in, get in short as well, you know, I don't want to miss this trend. But they will be late. They will be late, and they will have fine ES coming up against their face. And the same in the rally, they're gonna get run over. Now you'll see the price go up in a trend up day, and then towards the end, if it does come down, people will be like, okay, I want to get in here, bam, and it comes down all the way to the VWAP or lower. So, and you will see that happening. Those are the two best environments where you can see this type of sweep plays, trend days and on reversal patterns. In fact, obviously in range days, those breaks are less environmental, less powerful. You will see them less. So it's better to find those plays and play them on specific environment, on specific market conditions. Okay, when you see big trends or when you see reversals, they can happen very, very often. They happen every single day, to be honest, but they can be less effective. So don't try to look for many points, you know, during range days. If you can get 2 or 3 points on a small sweep during a range day, then it's okay, but don't look for much more than that. Also, another thing, look for level to be tested multiple times, like we have seen before on when the price approaches a liquidity level. Look for it to be tested. It doesn't have to, if it just get to the liquidity level one time and then comes back, obviously it doesn't work. But if it stays there and it tries to test it, and you see the accumulation on the volume, on the aggressive buyers, and they constantly try to accumulate and break, and that is a clear sign that the break is going to happen. Okay, so let's go to some video examples now. Okay, so I got some video examples that I recorded a while ago, and as you can see right here, we got some sweeps coming up, and there we go. I mean, you can see it exactly right here. They got some volume. This was an uptrend day, as you can see over here. Very nice big uptrend day, and like I was saying before, liquidities on the ask, you know, trying to fade this trend. But when you get here, that's what I'm talking about. Look at the pulling and stacking. Look, 470, 500 minus over there. And got in long over here and 29.8450 and taking profit at 85.50. Okay, I think I should have got profit. I took only 3 ticks over there, but that's when you see that happening. A lot of people will be like, well, look how many orders we got there, you know. Let's get in short, you know. Let's see this resistance, let's get in short. But when you look at the volume, what's happening inside, you will see that they want to break it. These orders are a little bit taking the liquidity off, you know, from orange is getting to yellow. These guys are staying, but for the most part, the liquidity is just gonna get taken. Okay. So this is one example. On the upside, it tends to happen very, very often. Okay. So let's look at another example. Got another uptrend day, and again, same story. Look at here. 400, 500 minus over there. You got buyers coming in. I don't know why I didn't enter right there, but there are gonna be some more opportunities. And like I said, they switch very quickly from one side to another, but you gotta find out, you gotta see which one is more prevalent. There you go, another time they're pulling in 300. And you see over there on the upper side, you know, they don't really add that many orders, you know. The most prevalent side where they're stacking is on the bid side and not so much on the ask. Even though they keep switching, you know, you gotta be fast to very quickly understand which side is more prevalent. And you can see it's always on the bid. Look at this. There's more also over there right now, but you know, we are being on an uptrend, and generally speaking, you'll see this side way more prevalent, you know, as you can see over there. Again, we were at 600, you know, again coming in over here. Okay, so again, it's like I said, you gotta practice, and there's a little bit of art to it, but it's just a little bit of a matter of practicing and finding this setup coming in over and over again. Okay, let's go to some other example. Okay, this is probably a more recent one. This is probably looks a little harder to detect. Those numbers are not as high as in the previous examples, but again, this side is way more prevalent here. 300 against 100. You can see the constantly adding more. 360 there was over there, and you'll never see those numbers stacking so much above, you see. And that's the opportunity of the sweep coming in right here. You'll see this happening over and over again. Now they're stacking more on the ask over there than on the bid. You know, that's likely. If those numbers are not stacking so much anymore, see, now they're starting to come back off. I really like this tool so much. It when you start seeing those little things, you can really have better and way more precise entries, keeping your risk really tight. Okay, on this example we have a downtrend. This is a very recent one as well, and this was not very easy to detect because those numbers are not very clear. But we do have a downtrend, and we see that the liquidity on the bid is a little bit fading away, and there was some exhaustion over here, that they weren't really interested in buying, and the volume is way more to the downside. As far as the pulling and stacking column, you see it's going very fast right now, but we don't see much adding downside. We don't see any adding. If I want to see at those levels, I want to see big adding to the bid, in order to stop the price, and that's what I don't see happening. Even if I didn't see a huge level of stacking, and granted it's very fast right now. In that day they were really fast, but still, you gotta find like those big numbers, and that's something that wasn't happening. Especially when you see, let's watch this one again, because it's really in the details, this type of thing. If I see the price coming down to the liquidity, either I see a real intention to come in from these buyers and stack more orders and really come in and push it back up, otherwise when they want to get away from it, see even the colors are kind of like trying to change them and fade away a little bit, more stacking over here and pulling over there, or less stacking anyway. Again, the orders are fading away from orange, is getting to yellow, and this one also is getting darker. Volume is more on the sell side, and there's not much buyer. Now the buyers are coming in right here, a little bit at least. It's still not anything huge, but for sure more. And there we go, there's some more stacking right now here on the bid, and you can see that. Okay, very important metrics. You gotta be quick. It's something that with a little bit of practice, it's a highly effective. This trade gave me I think it gave me 2 points or 2 points and a half, and I just keeping the risk really tight, because even though I didn't have a stop loss right in place right away right there, but sometimes it happens that if I don't put a stop loss and I just get out immediately if the price doesn't move away in my favor, and this was one of those times. Okay, so this is another example, a little bit of an older one. Got a downtrend day, and let's go a little bit more forward. Over here I'm taking a trade, even though the conditions are not exactly there. I kind of anticipated, I'm assuming on this trade, I kind of anticipated the liquidity to be taken, but there would have been a better moment. You see those numbers stacking on the offer. There you go, they're pulling, and that's when you get your sweep. Okay, move the stop loss closer. There we go. There are some buyers coming in there. Should have gone out. There I should have gotten out a little bit quicker. I think on this trade I held it way longer. Oh yeah, I held it way longer because there was a downtrend over here, but you see the importance is, you know, looking at the polling and stacking column in conjunction with the volume, you know, and to find those entries, those high probability breakout or breakdowns. Let me go and see if I can find another example. Okay, so got another upside breakout. We got the VWAP over here, and like I said, oftentimes you got a downtrend and then coming back up. It likes to go back to the VWAP again. Yeah, we got big numbers over here, but like I said, it tends to switch back and forth very quickly. You just gotta find out which side is the most prevalent for the most part. So I'm thinking this is gonna go get the VWAP, and we got the liquidity over there getting taken. Big numbers on the stacking over here on the bid, and that tells me, you know, in conjunction with the volume, this is gonna get taken. You know, I have my profit target at like 4 ticks. Here it is. Move it back down to like, yeah, now it's 4 ticks. Big numbers again here. Yeah, there was some bid imbalance over here before taking that level. Okay. Multiple examples. Okay, so how do we manage these trades? So in trend days, you wanna be able to have at least one contract to let go. So it's better to go with 2 contracts position, keep the stop at 3 to 4 ticks, the first take profit at 4 ticks, and the break-even stop for the remaining open contracts. So you take one off after 4 ticks and let one runner go, because on trend days you are very likely going to see liquidity takens multiple times. Look for the same pattern and higher liquidity in order to take positions off and repeat the play. So you'll take you let the one runner go after you take those first 4 to 5 ticks profit, because on those trend days you can get really multiple points. Take that contract off at the first touch of the next liquidity level, and then wait for the pattern to repeat. I wouldn't say just keep the runner going, because at the first touch of the next liquidity level you could get a reversal pattern. So just take your profits. You know, you started off with the 3 to 4 ticks risk. So if you get 4 or 5 points from one liquidity to another, one liquidity level to another one, you want to take that contract off, you know, and then see and if you can get the same pattern. Okay, while on reversal patterns, so like from downtrend coming back up, or from after uptrends coming back down, keep again the stop at 3 to 4 ticks, and just get in the full position in and out. Don't look for a runner. You could get a runner. Sometimes you get like a real big time full reversal, but those are very rare, especially like if you have like a downtrend and then a full complete reverse all the way back up to go break the previous highs. Those are they can happen, but don't expect them to happen all the time. So just better to get the full position in and out, take the target to 3 to 4 ticks. And if you are close to the VWAP, look to get the touch of the VWAP. So if you get like a downtrend, for example, and then you got a liquidity level, like a couple points below the VWAP, and it's gonna get taken, that it's likely gonna go back up to the VWAP. So you can try to take your profit like at the VWAP, or even better, 1 tick front running the VWAP right below. Okay, and so like I said here, during trend reversals, ES likes to get back to the VWAP, and late traders, they usually try to get back in the trend very late. Okay, again, do not stay in a losing position. This pattern has a high probability of playing out, but take the stop in case it doesn't. There will be a lot of other replays. Don't be like, oh, it's gonna break, I'm not gonna, get out or something. In case it doesn't, if you feel like the conditions are there, but it doesn't break and it comes back down to 3 ticks and take your stop, that's fine. That's not the end of the world. Maybe it's just not your day. Get back together, and you're gonna find a trend day or another play that's gonna give you back those 3-4 ticks or more, or a few points. But it's better to to take the stop and move on and go to the next ones. Those patterns happens almost every day, or no, they do happen every single day, and so look for the best opportunities. So another thing that I want to say is that try to look for the best setups, because there are going to be often a level of small liquidity, or what you can see the pulling and stacking column not give you a very clear indication, because they're going to be like switching back and forth very quickly, so it's not very clear where it's going to go. So avoid those plays. Just look for clear plays. Look for a strong liquidity level, and look for strong indication on the bid ask, on the pulling and stacking column. Strong indications. Okay, just look for the beautiful setups. Okay, and not just for anyone. Okay, very important. Okay, so that was it for this presentation on the sweep show. I don't know anybody, honestly, who uses this kind of setup. This is something that I have studied and developed by myself, and does work wonderfully. Make sure you practice, and don't hesitate to send me an email or get in touch with me on the site if you have any questions. Okay, thank you very much, and I'll talk to you soon.